Oh, we are live. So we got a good macro report this morning. PCE, the Fed's preferred inflation gauge, comes in just as expected. The market is ripping higher. I think we're going right back to all-time highs for the not all-time highs, but we're going right back to the previous highs. We talked about the S&P going higher following the macroeconomic data. It is breaking that downtrend, moving up, and we're going to look into that. We also have consumer spending actually staying kind of low. The consumers are strong. Incomes are coming up. We'll look at that data. Month over month incomes are strengthening while consumers are still spending less. Perfect scenario for lower inflation or to keep inflation tame and for consumers to remain strong. No recession. That's kind of what it points to. So we're looking at that economic data, and this is after GDP came in yesterday stronger than expected. So it looks like the economy is bottoming. It's starting to come back up. A rolling expansion is what some people call it. And that basically means, yes, we're in recession territory for some economic indicators, but for the most part, the economy is starting to strengthen, driven by a lot of that stimulus at the same time. So inflation expectations are improving, and we see the market. Let's go into the market because we're seeing the market start to move up on this data, and we'll dive deeper into that. Once we get these charts up, we'll dive deeper into how exactly what the data looks like. But first, let's take a look at markets. We have S&P here on the right, definitely ripping up. And let me take a step back. How's everything? How you guys doing today? Good morning, good morning, good morning to you guys. Soggy, Dodgeball, Spike, Dodgeball. What up? What up? How's everybody doing? Yeah, it's we're looking strong, man. We are looking strong right now. So far, S&P, and I just want to let's take a step back really quick on the S&P on the right. This is the trend that we've been talking about, right? We pulled back into that previous. Look at this gap up. What a monstrous gap up in the market. I think this is wave 2 FOMO. I call this wave 2 FOMO. We are starting to see wave 2 FOMO take place. We had that large breakout from the 420 level right here. This was the first wave of FOMO, 420, right? 420. That was that first wave of FOMO that we saw because a lot of people are off sides. A lot of fund managers, by the way, are definitely sitting in cash. They are underweight stocks. So this big move underweight stocks, we're seeing retail come in. Retail record 1.5 billion. What was it? I can't remember what it was. 1.5 billion, 2 billion inflows into the market. Most of that was Tesla, Apple, Nvidia. Apple at all-time highs now, hitting a $3 trillion market cap. This is wave 2 FOMO. And I am writing about this. We can go over the macro report. I'll be talking about it in depth tomorrow at 3 p.m. Eastern time. But for the most part, this is what we're seeing, wave 2 FOMO. And we found support here at that previous resistance, right? A little above it, but we bounced, we broke the downtrend. We started moving higher. Oops, sorry about that. We started moving higher, and now we're gapping up off this PCE data. This is the Fed's preferred inflation gauge. What does that mean? That means basically that the Fed is getting what they want. The Fed is getting what they want. The pause is on the table. PCE or prices are not rising, but growth is still not collapsing. Growth is still staying up there. So we're seeing a lot of good indicators. I think, like I said, I've said this for the most part, that this is wave 2 FOMO. We saw wave 1. Here goes wave 2. I think wave 2 will be even bigger. I got Tesla here on the left-hand side. A lot of people just got shooken out twice. I got in down here when we got that VWAP support stop under this wick. Did I get stopped out? I don't think so. I think my stop was at 48 cents. Yeah. So anyways, we're moving higher and on Tesla, and S&P is breaking higher. So let's dive in a little closer. We'll get to the macro stuff, but let's take a look at this data and we'll do some Q&A. If you guys got questions, what up? How you doing? Dimaj, Sagi, Spike, Dodgeball. Good to see you guys this morning. Very bullish on the market. Also AMD. So let me switch over to AMD. I hate to switch on Tesla because monstrous stock. It still has a lot of room to run. I think we're going to all-time highs, by the way. Mark my words, S&P 500, possible all-time highs this year. I really think it does. The way things are playing out. The Qs 100%. I think the Qs are going to all-time highs this year. That is not super bullish. Fund managers are off sides. Their positioning is terrible. They are definitely not in they're underweight. They are underweight. They've been underweight all year. The market keeps ripping up and they want to find excuses that it can't go higher, but inflation is making progress, right? We're getting global liquidity pickup, the bank term funding program. continues to be pulled from the bank. So there's more liquidity coming into the banking sector. There is no collapse there. We're not seeing that. And the reverse repo is fueling the asset, the supply of the treasury. So the treasury supply, and we'll go over that later. The treasury supply was supposed to drain liquidity for risk assets. It's not happening because the liquidity is coming from the reverse repo. And like I said, we'll look at that facility later. But look at this, just vertical. Should we have a pullback? Sure. But overall, what this tells you is any one of these pullbacks that we see on the S&P, right? Let's draw the trend. If we do get a pullback, that's getting bought up. It is getting bought up. We are in wave 2 FOMO. This is wave 2 FOMO. How long does it last? Who knows? But if you didn't get in, if you were a big fund manager and you didn't get in on that first push, trust me, they're going to be chasing the second push. And that's what we're starting to see as inflation expectations collapse. Also, oil is still, pretty, suppressed. It's pretty depressed because, like I've said before, Russia is selling such cheap oil in Iran that eventually, the Saudis can't keep cutting production because they're going to lose market share. So they will come in and start producing more. Oil collapses further. The only argument against that is, we're going to get a little more demand going into the summertime. I just don't think it's enough demand. So that's what we're looking at this morning. Bitcoin is falling today. Any bad news? Basically, the SEC right now. So the SEC came out, and I'll try to find it here. The SEC came out, or maybe not the SEC. Who was it? It was somebody came out, and they basically said, let's see, let me see if I can manage this correctly. The SEC came out, not SEC. Where are my... Oh, maybe I got rid of them. Anyways, yeah, there was some breaking news. I'll pull it up on my phone, but we basically got some breaking news. It's not terrible news, but I think they're just trying to... I think basically the powers that be are just trying to keep people from front running the ETF. I think it's coming no matter what. We're going to see that ETF come out. We're definitely going to see that ETF come out. But basically, and I want to get this right. Who was it? It was the SEC. The SEC says spot Bitcoin ETF filings are inadequate, cited by the Wall Street Journal. So the SEC is basically saying, oh, these filings are not good enough. They're not legit. But I think it's just it's just trying to keep people from front running the Bitcoin ETF. It's coming. It's coming. If anything, this is a precious pullback for Bitcoin, in my view. They're just saying, hey, don't get too excited. The ETF is not clear yet, but come on, bro. We know what's going on there. You guys are going to pass that ETF. BlackRock's your best friend. So big flush by Bitcoin down to 29K. And this is also an opportunity. I might actually take this a little more serious, MSTR, for MicroStrategy, right? MicroStrategy, 30% short float. So if this thing continues to rise, if Bitcoin just gets above 32, we're going to see a gigantic squeeze we're going to see a big squeeze. We're going to see a huge squeeze in MSTR. They just bought more Bitcoin, by the way, too. Michael Saylor continues to buy Bitcoin, right? This stock has the most Bitcoin by far out of any other stock. They hold the most Bitcoin. They've been buying it for 2 years, 3 years, maybe 2.5 years. And yeah, there's a big squeeze. So once we get over this 360 level, which I wouldn't even look at this, I would be looking at Bitcoin /BTC. This is futures. Also, we see a lot of volume coming in for that new leveraged Bitcoin ETF. They probably got smashed today off this news, but I think they're pulling out, right? You have the futures ETF for Bitcoin, which is this right here that we're looking at. So you got the futures Bitcoin ETF. Then you have the 3x leverage ETF, but they won't do a spot. They won't do a spot ETF yet. So what is that? What is that all about? Well, I think what it is they want to get people excited to jump in to the news, which, hey, if you were in at 25K, which we called multiple times, 25,000 was the spot. That's where we, kind of broke off of. We had that big up move. You're still up. Plus, you're looking far ahead. This is not today, tomorrow, next week, next month. This is the beginning of the liquidity cycle, and we're going to go over the liquidity cycle. We'll eventually do that. But point being, they're struggling to get that ETF passed. Not ETF. They're struggling to... The SEC wants to suck people in, give some negative news, shake them out so that, the big guys, the institutions can start buying that ETF lower. But at the end of the day, we know Bitcoin is going to rise, right? You got to have a black swan event for this not to happen. IWM just doesn't want to go, I guess. Let's see. Where's IWM? Down here in the left-hand corner. I guess you can't really see it. I'll throw IWM here. IWM, I think, yeah, hey, IWM is still strong. Still has some market breadth there. Let's see, IWM. Um, yeah, it has some resistance. We're running into some resistance here. Let me throw on that 30-day chart, 30-minute, my bad, 30-minute chart. Pull back a little bit. We are running into resistance, but IWM's been a monster, right? Market breadth is picking up. So again, you have market breadth. You hear people all the time, there's not enough market breadth, but that's just not true. That is just not true. That is false. We are seeing a lot of market breadth here. And yeah, if anything's clear, that is it. I might actually get long a couple more shares here. The Qs, let me see where the Qs are looking at before QQQ. Okay, the Qs are ripping. We're above that resistance level. That's super, super bullish. I don't like the pattern. It's not a beautiful pattern. It's pretty shaky at the moment. But if Tesla can rip down a little further, this is the 1-minute chart, so it's not great. If we can come back down to this top, maybe recheck 262, got to be patient here. Or this 21 EMA, then I might get long some more shares. I actually did pile in on this. I got caught up on here. So just to be clear, I got in here. We moved higher, and the break of this trend, I got in off the VWAP support. Boom, we got slammed. They trapped me, bro. These guys trapped me pretty good. Where was my stop? My stop was below VWAP, so I did stop out, but I still held the initial shares that I had in. And dang, they almost got me though, literally by about 12 cents, right? 12 cents. That was my stop. And we pulled right. Look at that strength right back above VWAP. So Tesla is strong. There's so much news in the pipeline. We're actually going to go over a couple of super bullish bulls on Tesla and what we're seeing down the pipeline. We got Cybertruck coming second half of the year. That's always big when they release a new vehicle. Deliveries are coming in this week. I still haven't looked that up, but deliveries are coming in. China's reporting a lot of strength for Tesla. China's reporting a lot of strength coming in over there in China. And plus, they're stimulating in China. Hardcore, they're stimulating. So, like, I don't know. It's bullish, very bullish for Tesla, very bullish for those risk assets that are actually the government's investing in for the most part. Electric vehicles, AI, all this stuff. This is a lot of good stuff in the pipeline. What are you guys looking at? SEC saying Bitcoin ETF filing inadequate. Yeah, exactly. So, hey, that's some bull crap. I'm gonna scale in here though. I'm gonna scale in a little more shares here. As long as we got the Qs moving up, the Qs are moving up. I think we have Bitcoin. I think we do have not Bitcoin. I think we do have. Okay, IWM is struggling. Okay, I see that IWM is struggling. I'm gonna go 25. We got IWM, and 265 is a lot of resistance for Tesla at this level. 265 is very, very strong resistance. That's kind of you could call it a head and shoulders. If we pull back a little bit, let's go to that 30-minute. Very strong candle. But look, this could be a head and shoulders, right? We don't know. Boom, there's a shoulder, there's the head. Now call this another shoulder. But to me, it's a break of trend. It's lots of momentum. The PCE data came out really good, and we're gonna go over that. Stay patient. So the PCE data is good, and that just sets us up. That sets us up for more FOMO. Wave 2 FOMO. Keep that in mind. We are getting wave 2 FOMO. When I look down here, oh, you know what? AMD finally starting to set up also. I actually got some leap calls for AMD yesterday. Not financial advice, but it looked very good. It's holding the level. I think the news is starting to price in. We see another daily wedge here for AMD, so I might get another call, or maybe I'll just sit back. But the Qs are so strong. I'll throw AMD up here. Now, let's see. Maybe we form a big look at the Qs just ripping. Okay, we're getting that break of trend here for Tesla. Let's see. Can we hold? I definitely, my stop will be under 263. Okay, maybe it's another, yeah, look at, okay, we're selling off. Good. Yeah, I want a bigger pullback. I do want to get back down to a zone because these breakouts are false. We're seeing a lot of false breakouts with Tesla. Yes, this is the 1 minute, so it's not legit. It's definitely not legit. When I say legit, it's a lot of noise. There's a lot of noise on the 1 minute, but again, I like it for entries. And I'm looking at a bigger swing trade here. I'm looking to trade this right back to not just the highs, but I think we're going to 300. All right, so there we go. You see the Qs on the right-hand side. They did get sold off, and then they broke higher. The Qs are on fire, though. This is insane how strong it is after that PCE data. There's a lot of FOMO. There's just so much FOMO. And let me put this on SPY. What is SPY looking like? This is, wow, just vertical, just vertical. We might have a large pullback. I really don't like this that we're so vertical, but we are squeezing those previous highs, right? We are squeezing those previous highs if we go back. And what that means is there's a lot of stops. There's a lot of stops after a big gap up like this. There is a lot of stops here at 434. I'm sorry, 444 for SPY. All right, there's my signal for Tesla. There's my signal for Tesla. If that doesn't go through, then if that doesn't carry over, then I don't know what does. But that is, I think we're getting some momentum here. We had the nice little pullback. Wasn't the sharpest entry, but again, I'm doing some commentary. I'm looking for a swing trade here. I'm not trying to literally day trade this. I don't think it's worth the risk reward because you get most of your moves on gap ups, and we are in swing trade. If you followed me from TikTok, I said if we get above 4,200 on the S&P, which is 4,200 is way down here, right? We got above that 4,200 level, more like 421. We're going to be in swing trading territory because the overall market is breaking out of this bear market. Like we're done. The bear market is over. You're going to have to really get lucky, you're going to have to really get lucky with if you're bearish with a black swan event for this to not carry through. So we're seeing right that big level got violated. We're moving higher. So, anyways, we're going to see a lot of stops up here get hit. This is very vertical though, so I wouldn't doubt we see a sharp pullback. Maybe we don't. You just never know. A lot of algos in there just buy, right? So 44, we are approaching that level. Now, maybe we just have maybe on Tesla, we actually form a bigger wedge. We could be doing that. Just want to keep my eye on it. So we're approaching that level. I'm going to draw the levels up here on SPY so we can keep our eye 44.39, 443.90 and 443.25. We're approaching those levels right now. So if we get above these, a lot of stops are going to get pulled. Now, I'd rather be super long on a Monday so I can see. So obviously there's a little more room throughout the week, but again, we're approaching that level. We could blow off top. So you just got to have your stops, know where you're at. Anyways, yeah, taking a step back, what I was saying is a lot of these big moves happen in after hours. A lot of these big moves are happening overnight, right? So Tesla, big gap up, right? We have the gap up here and we have another gap up. We've had multiple gap ups. Let me draw back a little bit. We've had multiple gap ups here, and these are where the big moves are happening in after hours. Oh, sorry, that was the wrong chart. Let me go to the 15-minute. So yeah, look at these moves happening in after hours, right? This one didn't really happen in after hours, but the pre-market, boom, gap up, support, gap up, support. So a lot of the big moves happen gap up are happening in after hours, which is exactly why I just want to hold that size and let the momentum of the market, let the FOMO, wave 2 FOMO do its work, right? I just want to let it do its work. So anyways, that's sort of what I'm looking at here. Now we might be just forming a bigger trend. Maybe we break down. Like I said, we're headed into a big level. So I expect a rejection initially. We might get that rejection initially on the S&P. Yeah, we might get that rejection initially on the S&P. We're holding this level for Tesla. Okay. And then we'll check out AMD too. So that's what we're looking at. And also we will check out, is my camera messed up? Let me double check that. It looks weird. It looks kind of weird today. Oh, well, get some light in here. No. Either way. Yeah. We're looking solid, guys. We're looking solid. What are you guys looking at? Still trading IWM. All right. So S&P is pulling into that, that zone. This is basically, there's nothing but air up here, right? There's nothing but air above this level. Wow, Tesla strong. IWM selling off. The Qs are, again, just vertical. Big buy. A lot of buying happening on the Qs. You know what? I didn't even look at the Qs overall. I didn't even look at the Qs overall. Let's double check what level the Qs need to run into. The Qs might be violating that resistance already. Okay, yeah, the Qs have a little more room to go. So the Qs are not there yet. The Qs are definitely not there yet. 372.85 was the previous high. But you have Apple ripping, right? I know you guys, some of you guys are watching Apple. Apple, an all-time high is $3 trillion market cap. What would you say? 372, maybe 372. Actually, I don't really like that. Let's go to the daily chart, sort of look at where we have. Okay, obviously that's the top. We have the top here at 372.85, 372.80, whatever. And then we are running into resistance here. We got some resistance there. There's some room to run on the Qs. There's some room to run, which is really good for the upside because there's more momentum. All right, there we go. Tesla new highs, nice. But the Qs are exploding here. What else do we got? MicroStrategy, and I wanted to look at MSTR. What is MicroStrategy? Is this an opportunity to buy MicroStrategy? Because now you have the Qs bottoming. You have Bitcoin with the finally getting a pullback on Bitcoin, and MSTR. Though that short squeeze, the reason I keep saying this because it could be a nasty upside trade. It's a very expensive trade though. It's an expensive trade, but a lot of people won't be able to enter it. I get it. You could buy shares on it so that you're a little safer. Options, I just think options have a great risk reward given that the Qs are starting to lift, that technology is leading the market, that the Bitcoin ETF is going to drive this narrative, and we're basically in wave 2 FOMO. So we'll see how that actually plays out going forward, but I still am keeping my eye on this consolidation on MSTR. AMD, actually, no, my bad. Let me load up the trader. So AMD, let's take a look at AMD really quick. I know some of you guys were looking at AMD. When we look at AMD on the daily chart, it is pulling back pretty nicely, right? We had that pullback. You see the bottom start to form. So we're getting the bottom start to form on AMD, and it had a 20%, what was this, 20, 19, basically 20%, 19% pullback, supported that previous support, right? Our previous resistance, my bad. We supported that previous resistance 1, 2, 3, 4 days. Now we're starting to lift. I got calls yesterday at 111, 112. I don't like to tell people what I'm doing because people just copy, and it's more so like, hey, there's opportunities. I'm just going to show you the opportunities. You make your decision. If you want to know exactly what I'm doing, book a call or email me, throw it up in the comments. We'll talk about it. Either way, AMD starting to lift now. The only negative would be, if the China ban goes into effect. NVIDIA just said it wouldn't affect their revenue. Kind of hard to believe, but we'll see how that plays out. So we are seeing AMD gap up and basically form a little a wedge pattern. I don't know if it's not a perfect wedge, but we're wedging above VWAP, clear resistance above 114. Right, we could be getting above 114 or 113.75 possibly. AMD is a wild card, but it is looking pretty good for AMD. A lot of strength there, and that's following that's following yesterday. We had that double bottom. This is kind of what got me in, is we had that double bottom on PDC yesterday, and I'm looking 6 months out. It's not like a day trade. Double bottom here, right? We bottomed at PDC, came back up, but double bottomed again. Looks good to me. I wouldn't swing trade this for a week because you just don't know. We're still below VWAP, but we are gapping up. The overall market's gapping up. PCE data is coming in clean. So yeah, a lot of strength. Okay, if we're finally getting a pullback on the S&P, this is good, right? Right into that level, exactly like we said, we should be seeing a pullback right up against that previous high, exactly happening. Now here comes the FOMO. Are we going to bounce? Are we going to come back to VWAP, right? Where's our next support? There it goes. There goes the pullback. I wouldn't get too nervous here. We'll see how the volume looks coming into this. And then are we seeing, this is just a 3-minute, we're getting some bearish divergence. Of course, we should be. That was a very vertical move. That was a very vertical move. Maybe we double top. Maybe we double top. This is not it. Either way, the pressure is on. The pressure is on. A lot of fund managers are underweight, and we're gonna find out if they FOMO into this move. And they're what are you hoping on? You're hoping on what? Student loan repayments crush the economy? I don't think so. I don't think so. It's just you can't depend on one economic indicator to really slow down the stock market. The stock market's already pricing it. We're seeing growth expectations rise. Estimates for technology and certain names are going higher. And that's part of the reason why we're seeing this big upside move, because expectations are starting to improve. We're getting those expectations improving. See, what are we missing here? Yeah, so we are getting that. Anyways, yeah, how are you guys doing this morning? Finally got my protein bars in. Finally got some protein bars to stay healthy, stay as healthy as we can. Let me pull. Now I'm going to pull up some of this. Oh, there's my data. Okay. There's my macro. There's my macro data. We're going to go over this macro data. We'll go over this calendar, what we're seeing. Now, who's hot in the market right now? Let me look at my RVol scanner. I want to see what stocks are in play and if there's any good setups for some of you traders. I'll just call them out really quick. Oh man, Tesla new highs, nice. Tesla new highs. The FOMO is in. 265 is a big level though. So 265 is a big level. And advanced decline here on the left is still above. We're still holding up. The Dow is pretty strong. The Dow is holding that previous level. VIX is at 1330. We might see a 12 VIX today. Wait, let me see. Do we have room to get to 12? We could see a 12 VIX. You can't see it down here in the corner because my face is in the way, but we could get a 12 VIX. Wow. Big. Wow. Okay, that was a big red candle. That 265 ain't no joke on Tesla. We'll see if the buyers step in here. We'll see if the buyers can step in. So anyways, yeah, what are some stocks? Is there any good setups just right off the bat? And because we are coming into resistance, and if we get slammed, if we get if we get a giant pullback and you have any shorts that you're looking at, those shorts will come through. Those shorts should carry over if you have a nice short setup, but we haven't talked about that. We have not talked about that. Overstock.com, man, this thing is right back on the map. I remember trading that back in the day. Okay, so economic data. Let's go through that for today. I'm going to pull this up. See, where should I pull this up at? 262.81. So PCE month over month, personal income month over month. I wish I could overlay it on one side. I'm not sure you could do that here. You might have to like literally just pull it up. Too bad you can't overlay multiple charts. Okay, so there we go. SPY starting to turn up. Oh, you know what? I'll just do the entire screen. Yeah, I can do the entire screen and then just pull it in here. There we go. That should work. It just looks kind of weird, but you can still see it. Let me see if there's a better way of doing it. Yeah, that might be the best way to do it. Okay, so I'll have the obviously you have S&P right here, right on the left-hand side. This is the data. We're going to talk through some of what we just saw today. This is why the market's ripping, other than the positioning, the technicals, blah, blah, blah. This data caused the market to go much higher. Okay. So first off, do we need to look at Europe? No, we don't need to look up Europe yet. Personal income. Well, actually, let's start with the PCE data. PCE is the Fed's preferred inflation gauge. This is what they say they focus on the most. Okay. Month on month is probably more important than the year on year. Because the pause, month to month data dependent. They're looking at the month to month. But if we do look at the year over year data for PCE, it's obviously continuing to decline. So the macro, which I always love to look at the macro coming out of a bear market, the macro tells us that that PCE is falling and that it should continue to fall. It's not going higher, it is falling. So even if the month to month is kind of sticky, the year over year tells us that it's collapsing over time. And there's a lot of evidence for that. We're seeing that collapse in other areas. Anyways, so PCE, personal consumption expenditure, is the term, the technical term for it. Year over year is falling. Now, the month over month's a little more important. So let's go to the month on month PCE. This is not core either. So month on month was at 0.1. That is near zero. Come on, bro. That's near zero. What does that tell you? That tells you month over month that PC as a whole, not core. PC as a whole is, if you annualize that, right? You compare this to you want to compare this to inflation. So if we analyze that times 12, we're getting 1.2, 1.3% inflation for PCE for the Fed's overall headline PCE. Okay, great. That's really small. That was a big pullback from 0.4. That's good. Good news. Okay. Now let's go to core. Core is the sticky part that a lot of people disagree with. Well, core is still sticky, so we're gonna stay outside. Okay, great. Stay sticky. I mean, stay off. Keep out of stocks or stay underweight. That's only gonna make you blow off top. That's why we're seeing this big blow off top, because people are underweight. So let's go to core year over year. This is important, right? The core is what the Fed is most focused on, because everything else is collapsing, everything else is going lower, and the market is rising because it sees that it's forward looking. But the Fed still, holds their narrative that this is sticky. So we look at core, and core tells us it is also falling. Let's just look at the bigger line so you could see the big trend, right? The big trend is, it looks a little sticky. It's not collapsing, right? Because core is a little stickier because of shelter, because of spending. But that's not necessarily terrible. That's why our economy is stronger than people expect. That's why GDP came in strong yesterday, right? Better than expected. It was expected to be at 1.4% annualized, and it came in at 2%. So our GDP is lifting. There's no recession, right? No recession in the future. That's what we're seeing. So anyways, core PCE annualized is still falling. And look, we're under 5%. The Fed funds rate is at 5 to 5.25. So we're in restrictive territory, which tells you there's progress being made. We're below where they hold rates. That's what the Fed wants at the end of the day. And also Bostic Atlanta, the Atlantic Fed chairman, not Fed chairman, but the Atlanta Fed, blah, 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 whatever. He said we should pause yesterday. He's the dove, but he's saying there's no need to keep hiking. Now let's go to the month on month. The month on month is probably the one everybody's looking at. If this does better than expected, core month on month, where is it? Core month on month, core PCE month on month. Here we go. Core PCE month on month came in at 0.3. So yes, is it sticky? Sort of. You don't really want to see that chart. Let's stay on the month on month data. You just kind of want to look at the bars, right? So we're at 0.3, expected 0.4. So it came in lower than expected. Great news, right? That's good initially. And if you annualize that, you're getting 3.6% inflation. That's still progress. We're getting 3.6 inflation. And hey, maybe it sticks around here a little bit. It falls slowly. But again, keep in mind when those shelter rents price in the CPI, when we get shelter and rent come in lower because rents in real time are falling, we'll go over that. Once we get that in, this core will collapse, in my view, right? I think by the end of the summer, we're going to see that. Maybe not. Maybe it sticks around here, but I don't think the market cares because there's still more progress on inflation. Okay, now let's go to the consumer, right? The consumer is part of the economy. You got business activity with the PMIs. That's a little, you got business activity, you got the housing market, you have the consumer, you have what else are we looking at? You have inflation, obviously. And this is just the macroeconomics that you kind of want to think about. And you also have dang, what am I missing here? Oh, employment. And we're also looking at employment. We know employment's pretty strong. Unemployment still at record lows, historically record lows at 4.6%. I mean, I'm sorry, 3.7%. Maybe that goes a little higher over time as things slow. Maybe not. We'll see. And we also know that payrolls are still strong. So people have jobs and they're still spending. It's happening. That's happening. That's the data. So anyways, the consumer. So this is how the consumer is doing. And these are usually month over month readings. We don't really get, I don't think there's year on year readings, but this is the personal income. Personal income is staying pretty sticky at 0.4. So people's incomes, and this was expected to be at 0.3. We came out at 0.4. and that's good. That means people's incomes are increasing month over month, right? Now, spending is the part where you kind of want it to slow down, and we're at 0.1. So people are, I think, I've been saying this for a while, savings rates are going up, and the actual incomes of people, I'm sorry, their spending is low, is starting to slow down, and I think that's a signal for people bracing for a recession. I think people are bracing for the recession that may not never come, but we're kind of in one already. I think we're already in sort of a rolling recession in some areas. It was in finance, regional banks, technology, manufacturing. Manufacturing is still in a recession. Housing is starting to lift, but housing has been in a recession also. So now commercial real estate is probably going to be the next big signal for the recession. But it's not a surprise. Everybody sees it, which is why the market's still moving higher. It's not a surprise. So like the market it gets surprised, and we're not seeing volatility go up. So the VIX is falling, right? The market gets scared when there's a surprise, and we're not getting any surprises. So that's the data. Now we did just get consumer sentiment. So this is like, okay, how are consumers looking? How are they feeling? It improved month over month. From May to June, consumer sentiment from the Michigan study improved, right? Good news. All right. So what about 5-year inflation expectations? They're at 3%. They dropped again from 3.1 to 3%. So inflation expectations are falling. That's also why the market's up today. What about the 1-year expectations? No, that's not what I'm looking at. Where's the 1-year inflation expectations? I think this is 1 year. This might be the 1 year. Yeah, it is. There we go. Michigan 1-year inflation expectations came in at 3.3%. So those are still falling. We made a new low, new cycle low, new inflation cycle low for expectations. Great news. What does that tell us? That tells us that inflation expectations are falling. And that's going to give the Fed more reason to pause, hold the pause, maybe not hike in June. So next, I want to see, what is the CME data telling us? Did the market change its rate hike projections? Let's look at the CME data really quick. And this basically tells us, what is the market pricing in? CME Fed Watch. Yeah. What is the market pricing in for next month? Are we pricing in a larger or smaller chance of a rate hike? At this point, the market doesn't even care about rate hikes. Okay. So it's still pricing in an 86% chance that we hike rates. And we're still moving up, because the closer we get to hiking more rates, the closer we get to cutting rates or pausing. And I really don't think it matters, because growth expectations are moving up. So the market historically can still move higher with rate hikes moving up. That is not, that's not a foreign concept. That's happened before, especially when you get fiscal liquidity or fiscal policy from Joe Biden, Inflation Reduction Act, infrastructure bill, the CHIPS Act, all those fiscal policies. And he's doing the $42 billion internet deal. Pretty much everybody gets Wi-Fi. As those policies come in, you're still getting liquidity into the market. So the Fed can keep hiking. And if something pops, well, there goes the Fed's balance sheet higher, bank term funding program, right? So we're really in a Goldilocks situation. Goldilocks as in growth is starting to re-accelerate and inflation expectations are falling. That's a Goldilocks scenario. And that's why the market is pretty much elevated and moving higher. So yeah, that's what we're seeing there. That's the macro front. And now if we go to the macro forces, excuse me, sorry about that. If we go to the macro forces, which are, what is the market actually telling us versus what we're seeing, right? What is the market telling us? 2-year yields, right, versus what we're seeing? Because we could read the data all day, but the actual macro forces are these are the actual prices moving. These are people's actual decisions. The 2-year yield is screaming higher rates. It's not really about inflation, though. I think it's just growth is higher than expected, and it's so far it's okay with that. And you also have the 10-year pressing against that level. We haven't broken out yet, but hey, maybe I've been wrong about this. Maybe yields go higher. I didn't expect them to, but maybe yields go higher until core collapses. Once core collapses, those shelter prices come in. I think core does collapse. And what does this really mean? The cost of capital, right? The cost of capital comes down, fuels the wave 3 FOMO, because right now it looks like wave 2 FOMO doesn't care about rates. Wave 2 FOMO cares about growth coming back. And we're starting to see that. Oil prices, right? Oil prices still trickling down here. I think those collapse. And we could talk about that a little further. Volatility is collapsing. The VIX is near, 12, almost in the 12. So volatility is collapsing. Bond market volatility is coming down. So volatility is basically insurance against the market. People buying insurance, and they're not. They're not buying the insurance, because why buy insurance for something when the risks are disappearing, right? When the risks increase, then you buy insurance. So regardless of what I think or you think or economists think, these are the real market decisions being made, and nobody's buying bond volatility. And there's a reason this bond volatility is not going higher. There's a really good reason for it, because first off, the issue was, oh well, the Treasury general account, or when the government raised the debt ceiling. So when the government raised the debt ceiling, what they're doing is they're actually sucking liquidity, $1 trillion of liquidity from the banking sector, from capital markets, to fuel government spending, right? So bond volatility was rising, and well, this was actually SVB, but this was the regional banking collapse. So bond volatility started to rise, but what we're actually seeing is that liquidity is not being pulled from the capital markets. It's actually being pulled from the reverse repo, which is $2.5 trillion that is parked at the Fed. So it's like, oh, it's a net nothing. It's a net neutral. So that's more risk on for markets. Okay. Triple B spreads are falling, right? This is equity risk premium. No, I'm just kidding. I just want to use that term. But what this is if this falls, you're seeing that there is risk being taken on equities, right? And equity portfolios, risk is being taken. If it goes up, that means people are ditching. Just to make it simple, they're ditching corporate debt, and they're going into treasury debt, because treasury debt is never going to fail, where corporations fail all the time. So corporate debt is a lot more risky than treasury debt, but that's falling. So people are actually moving towards corporate debt because it's more profitable, it's more risk, more reward. So we're seeing risk on behavior there, right? Now, what else do we have? We also look at the dollar. Now, the dollar is moving sideways, and we always said, hey, if the dollar moves sideways, that's okay. Markets can still move higher as long as it doesn't get over this 106 level. This is my big risk off level, but we haven't seen that yet. We're not seeing the dollar move. If we break below 101, and this is probably going to be when QE comes back, because you're going to obviously debase the currency. You're going to create more currency to fuel growth, and the dollar should actually fall. And that's going to really put risk. That's what Bitcoin moves off of, by the way. Bitcoin moves when currency debasement happens, when global liquidity cycles really start to accelerate. And we're at the bottom now. It is going to start accelerating in China. It is in Japan. It is in Brazil. It is in India. It is, but not the US yet. The US is kind of neutral, but there is more liquidity coming in. It's just not accelerating yet. So that's what we're looking like on a global scale when it comes to the risk, the forces, the macro forces. The macro forces plus the economic data points to risk on, wave 2 FOMO. And the only way that doesn't happen is if oil starts to surge. I've said this over and over, because that's going to raise inflation expectations. So if oil does surge, yeah, maybe we go negative. Maybe we go negative if oil surges, because inflation, this is the biggest component, but that's not happening. And shelter will collapse eventually. So keep your eyes on this oil price. That's still the biggest risk to the market, but it's not going to happen when Russia and Iran are selling as low as $37 a barrel, right? They're gaining market share. China and India, the biggest populations, are buying cheap oil. Why would they go buy expensive oil? They're going to buy cheaper oil to fuel their economies. And in that case, the oil price goes lower because you're creating more supply at a cheaper price. And the Saudis are over here, oh, well, we're going to increase production, or we're going to cut production to get the price up. Great. The more you cut production, the more you lose market share to Iran and to Russia. They can't keep it up. They're going to capitulate, in my view, at some point. Plus, global manufacturing is in recession territory. So we should see oil prices fall further. So that's my take right there. I know that's a lot of information, but for the macro, things are looking good. Look at the Chicago PMI. It's not falling apart. What is it? This is business activity in the Chicago region. Maybe we're starting to bottom. So yes, manufacturing is in recession territory, but if it is bottoming, this is really the last shoe to get the cycle going, which is PMIs, or global business activity, starting to pick up. In services, it's strong, but the manufacturing sector is still weak. So I think we're still in wave 2 FOMO. Wave 3 FOMO, wave 2 FOMO gets us to all-time highs. Wave 3 FOMO gets us accelerating above the all-time highs. We won't probably see that till the Fed actually cuts rates and the PMIs really start to bounce and the dollar starts to fall. That's wave 3 FOMO. We're not there yet because of currency debasement, because the liquidity cycle really starts to kick into gear. Okay, so that's kind of what's going on there. And yeah, let's get back to the charts. Let's get back to the charts here. Back to the charts. How do I do this? Back to the charts. All right, cool. Back to the charts. Back to the charts here. All right, so we got 2 retests of the all-time high, well, the 52-week high. We got 2 retests at 44.36. Got rejected twice, but we're still holding above VWAP. This is a 3-minute candles. Looks like we are forming a bear flag. That's pretty bearish, but we're holding VWAP, and VWAP is institutional buying. So we're holding VWAP. Here on the left-hand side, we are seeing Tesla hold that 263 level. Actually, yeah, it is about 263. I think it's 263. We're holding 263. Pretty solid here. And I am keeping my eye on AMD in the corner. I can see AMD on the corner side. Anyways, AMD. Yeah, let's throw up AMD really quick. Oh, who is that? What's going on? Oh, IWM still collapsing. Rotation into big tech, basically. Rotation into big tech. Dow kind of weak. VIX still falling. VIX is still falling. AMD just broke that wedge. AMD just broke that wedge, starting to lift off. I'm not day trading this, but I do have some leap calls on AMD. Let's check out NVIDIA intraday. What do you guys want to see anyway? What do you guys want me to do? Some technical NVIDIA. Throw out some technical analysis. Let's do some TA on anything you're looking at. See if there's an opportunity for a swing trade, day trade, whatever. Or maybe it's just your investment and you want to get some TA on it. Throw it out there. Glad to see you guys. Oh, wow. NVIDIA just surging. This is partly why the Qs are so strong. Okay, so NVIDIA had that big move to the upside early on. Had this sort of wedge. I guess you could call this a wedge right above that previous level. Broke out of that wedge and just has been stair-stepping higher back to forth. There's so much FOMO into NVIDIA, and I think this eventually slows down, maybe in 3 months, but it flows into AMD at some point. All right, yeah, that's looking weak. We're getting a rollover on the SPYs. We are getting a rollover in the SPYs. Let me double check. We are testing 263 on Tesla. And Tesla could come all the way back down here, so I'm keeping my eye on that too. Oh, it's really starting to roll over. Got to have your stops. As long as we're holding VWAP, I think as long as we're holding VWAP, I'm going to expect a bounce. Now, if we don't hold VWAP, yeah, maybe get out some. But we are holding VWAP. We're holding 363. A lot of FOMO coming in there. Overall market, though, is sort of weakening. Now, the Qs actually look pretty straight, though. I like the Qs right now. The Qs are strong. Qs are looking pretty strong. Bitcoin. Now, Bitcoin looking at... oh, there we go. VIX making new lows. VIX making new lows, and we know why that is. We know exactly why that is. Let's see what else we got down here. Open door starting to roll over. We got that double top. Maybe it comes back to 340, which is the breakout level. Check out oh, okay, yeah, there we go. A SPY rolling over. SPY starting to roll over a little bit. Let's look at Amazon. Oops. Ooh, IWM just collapsed. Taking a look at Amazon, Apple at those all-time highs. Dang, Apple at all-time highs. Um, it could break that trend. It could support VWAP, break that trend, and move higher. Why did they reject Bitcoin ETF? Chavez, they didn't. Well, they didn't reject the Bitcoin ETF unless that just was like breaking news right now. They just are using expectations like the Fed to walk people down and basically say, because there's a lot of Bitcoin ETF filings that already have been rejected or just haven't been approved. Really, they just haven't been approved and basically rejected. So everybody's saying, well, BlackRock, they're not going to get, they're going to get approved for sure because it's BlackRock, because they're they're the government's friend. The government literally used them during the pandemic to push through three treasury bond purchasing programs. They use BlackRock. So BlackRock's it's the biggest asset manager in the world. So I think just from all that rhetoric, they are trying to walk people down, and the SEC say, um, don't get too excited. They're basically saying, don't get too excited. It's not approved yet. There's a lot of issues, but they have not rejected it yet. It usually takes like 30 days, and we'll see. I expect more language like this to happen, but they say, why would BlackRock file unless they knew? Why would they file unless they wouldn't file for a Bitcoin ETF unless they knew they could get it, because they always get approved. They've been approved 99% of the time. I think it's like 500 out of 578 filings to the SEC. They've got rejected one time. So they got a nice track record. Does that mean it's going to go through this time? No, it does not. But what it does tell you is that the correlation or the probability is definitely in the favor of that Bitcoin ETF being approved. Maybe it takes more time. Hey, it could take 6 months from now. Could take a year from now. Could be, could be a nothing burger. So options are very tricky, which is, options are very tricky, but holding Bitcoin, I mean, man, it could just explode without that. And it's not just the ETF that is fueling Bitcoin. MasterCard and Visa are doing some blockchain stuff also. And they're doing some blockchain stuff. The overall liquidity cycle is starting to turn up anyway. So there's a lot of other stuff that can definitely, hey, people who are sitting out, they thought we're going to 10K, 12K. You saw major Bitcoiners talk about 12K Bitcoin, 15K Bitcoin, altcoin daily. I like the guy, but he's very bearish on Bitcoin. And that's just not happening. It's going higher because what they don't, and I'm not saying I know everything, but I study a lot of macroeconomics. I try to keep up with the news, and here's what's going on. People are getting FOMO. The overall market is picking up. Risk on conditions are here. Inflation is falling like a rock. Yes, bond yields. Well, let's not even talk about bond yields. Inflation expectations are falling. Earnings are revising up. The recession, the housing market is starting to bottom. Consumers are strong. They're still spending. So we're not seeing we're seeing the economy start to recover. Joe Biden is printing like a madman, right? The Fed is still printing, even though you don't see it. They are still printing with the Bank Term Funding Program to support regional banks who lost their deposits. As a matter of fact, we just broke another high in that program yesterday. So liquidity is coming in. So these guys, I don't know if they see that, but from my understanding, from my research, liquidity is everything. So also China, Japan coming in. Like, I'm just going to keep saying this because, so that you guys can remember this. If somebody says, hey, why should I, be bearish? Why should I be bullish? Now, the bearish thing would be like, obviously, geopolitical unrest. China invades Taiwan, but those risks are starting to fall. Here we got VWAP support here on the SPY. We're getting that VWAP support. We're getting Apple rip. Now, Apple's at all-time high, so this could be a nice setup. I don't trade Apple. I'm not interested in it because, it's just not my trade. Maybe one day I'll trade Apple, but I'm not trading Apple. 3 trillion market cap, though, that's insane. Apple's larger than a lot of economies. Their cash flow is more. Also, they have a lot more cash flow. So yeah, that's in the pipeline. That's what we're seeing happen in the pipeline. Inflation expectations are falling everywhere in the world. Europe is a little behind, and that's okay. So taking a look into next week, we get the ISM manufacturing PMI. This indicator is the last indicator, really. It could keep falling, but that keeps the Fed on pause. If it bounces, I don't think it bounces yet. I don't think it's time. Maybe by the end of the summer. if the ISM PMI bounces, the manufacturing index, which is the leading, this leads the business cycle. When it peaked in 2021, Bitcoin peaked exactly, and then the stock market peaks. So it peaks first, it bottoms first also before the market. Not before the market, I'm sorry, it peaks first. So it leads, anyways, to make it simple, business activity leads the global cycle. And when this thing bottoms, it's pretty much clear that, there is no more risks other than black swans. So, hey, black swan investors, good luck to you. But we are seeing, and inflation has to keep coming down. We obviously need that too. But like I said before, oil is the biggest input. It's falling. I know nat gas is up a little bit, but I mean, nat gas got pretty much destroyed. So okay, it's up. It's up like what, 5%, 10% from dropping 80, 90%. I think it dropped like 70 or 85%. So yeah, whatever. Don't care. Only concern is commercial real estate. Yeah, commercial real estate for sure. Now, what I've heard about commercial real estate is it's always an issue when there's a surprise in commercial real estate, right? When there's a surprise, that's the real risk to the market. But the market's already, scoping this out. And when I say the market, I'm talking about every participant, every economist, every banker. They just did a stress test, by the way, Fibonacci Poppy. Ace, they did a stress test on the banks. If and the stress test had something to do with what was it? Something to do with collapse. What was it? A collapse in for that. They basically simulated the commercial real estate collapse. And I think the only bank that was over leveraged was like, who was it? It wasn't Citibank. I can't remember. So they did the stress test the other day, and they were fine. So, and like I said, unless there's another surprise, and it's not like they're just, walking by whistling, they're always gauging where the risks at. How do we prevent these risks? And at the end of the day, even if there was a surprise, we'll see a pullback in the market. We'll see a nasty rip, and then we just see more bank term funding programs to supply that. That's my guess every single time it happens. So keep your eye on the regional banks. I mean, we're seeing regional banks recover. So who is it? KRE. Look at KRE. KRE, if they were worried, okay, today it looks nasty, but if they were worried about the banks collapsing, you wouldn't see KRE, which is the regional banks, continue to go higher. Now, yes, commercial real estate sectors will fall as this happens because they're losing revenue. Dance a lot of sales, but it's not really them we're worried about. Who cares? Like, I don't care. Nobody cares about regional. Nobody cares about commercial bank. And I'm just saying in general, nobody cares about commercial real estate investors. The market cares about what's going to drive growth. And right now we're in the what economy? We are now in the not the token economy. I'm sorry. We are now in the economy. Man, I can't think right now. We are now in the virtual economy, right? So of course, we're not going to see commercial real estate demand because people are using Zoom, they're using Microsoft Teams, they're using Google Meets, whatever it is, they're hanging out on Discord, they're hanging out. So like that's already priced in my view, which is the collapse in demand. We've been talking about it now for like 3 or 4 months. And so it's priced in. So there'd have to be some type of what do you call it, surprise that happens. I don't think that's it. I think it's geopolitical. I think that's the real thing that could bring us back lower, retesting previous support lines. So yeah, commercial real estate, that risk is out there, but it's already priced in my view. I mean, they just did the banking stress test for it. So yeah, I'll be here. I'll be here on Monday, Sagi, 100%. I'm gonna try to start at 10 a.m. Eastern. I believe, yeah, 10 a.m. Eastern, just to give 30 minutes in case I'm making any trades or any decisions for the first 30 minutes, let the market kind of digest things and then jump in at 7. So that'll be my schedule for now. I'll be here. Good to see you guys. Thanks for joining. Appreciate it, man. So, okay, we're getting that push off of VWAP for the SPY. and that's pretty good. I know everybody's, looking at this high. Let's look at the Qs. What are the Qs doing here? Hold on, let me go grab my protein bar and turn this fan off. Um, Got to have that protein. China also has hidden foreign exchange reserves around 3 trillion. More liquidity. Dark liquidity is what I hear that called the dark liquidity. Everybody be bearish, go lower, and the market goes up. The market is smarter than us. There's a reason why it keeps moving higher. There's a reason why the S&P, and you know what? Let me turn these gaps off. Oh, let me turn these gaps off really quick. These pre-market highs, so we can see sort of this price action. Now, we don't gap up like that because for no reason. There's a lot of people that just had to hit out their shorts, that just had to cover. So you have a short covering because PCE data came in better than expected. Right now we're pushing all-time highs. Hey, maybe we consolidate for a couple days. Maybe we even pull back and fill the gap over the next week. But it's all noise. The path is higher. The path is much higher. Or else we would have kept collapsing here. We just didn't. We found support. So S&P is strong. That's a huge gap. Maybe it gets filled, maybe it doesn't. We'll see. And what fuels that, right? What gets us above? Is there anything in the pipeline that could take us higher or bring us lower? ISM PMI comes in next week. If it comes in weak, then I think that's fine. If it comes in weak, if it's extremely weak, that'll be an issue. Now, prices paid are going to be important. If prices paid are elevated, which means inflation for prices go up, which I don't see that happening, we might be in trouble. But that's just for the manufacturing sector. I don't see it happening. China also has their PMI next week. Construction spending we get next week, and that's starting to boom because Biden's infrastructure bills, right? Biden's bills. He's building the Bidenomics. We call it Bidenomics, and he is on course to just keep spending, and he can keep spending despite the debt ceiling. Why? Because liquidity from the Fed reverse repo facility has $2.5 trillion. Now it's down to 2 trillion and it continues to drain. And why is it draining? It's draining because those money market funds who have a lot of cash, who actually run markets, mutual funds, Charles Schwab, BlackRock, blah, blah, money market funds are now incentivized to buy US treasuries instead of going into the Fed's facility. So what's happening is they're taking their cash out of the reverse repo, getting 4 point whatever percent, 5%, 4.7%, whatever it is, 4.1. I think it's like 4.2, 4.4%. They're removing their cash from the reverse repo and they're parking it. Well, they're not parking it. They're not parking it. They're buying US treasuries, 3 and 6 month bills, because they can get higher yield at a shorter term price, at a shorter term. So if you can get higher yield in 3 months versus a year, why not do it? Why wouldn't you do it? That's way more liquidity. That's double what you're getting before, right? And plus, you're already anticipating the Fed cutting rates next year, which means there's going to be a buying of those. There's going to be a lot more buying in the short-term bills or whatever. Okay, so what's going on? Why are we collapsing? No, I'm just kidding. Anyways, yeah, so liquidity is here. We definitely have liquidity. Absolutely. Thank you for all you do. Have a great weekend. Hey, you too. Take it easy. Have a great weekend. Stay safe. I'll be live if you guys want to check it out Saturday, 3 p.m. Eastern. I'm going to go over the macro report. If you're interested, check it out. Help me out with the channel so I can get some more subscribers and get this algo going, get a better community, and improve everything. So check that out if you're interested. And don't forget, we have the fitness live at 7 p.m. Get your fitness right, get your health in order, get your life in order. We'll be doing that on TikTok Saturday at I believe 7 p.m. Eastern, 7 p.m. Eastern time. We'll be doing that live host and ask your questions, and check that out. We're still building that up. Check out the newsletter too if you haven't subscribed. If you have not subscribed to the newsletter. All right. Oh, Max P. I'm sorry, I didn't even see your here. Let me throw that up there, Max P. I'm gonna go over Max P's comments. Let me just go grab a protein bar and drink some more of this coffee. Let me take a little break. I got a hard stop at 9 o'clock though, too, about 50 minutes because I have a meeting coming up, so I will have a hard stop. But I'll be right back. Okay, I'm back. Chinese economy, right? So the Chinese economy, we're getting a bounce here on SPY. That's good. Nice hold. All right, so Max P, thoughts on Chinese recovery? Well, here's what happened with the Chinese recovery. So China, basically, they went into COVID lockdown right last year, and they recovered. They started cutting rates, and they're still cutting rates, by the way. They started re-stimulating their economy, pushing more stimulus, blah blah blah. Central banks, money. M2 growth went up, and so basically, China is recovering. The problem is that their population is aging. They have a very aging. They're not the leading population anymore in the world. So China, they're very conservative too. They don't spend like Americans. So their economy is not recovering as fast as they thought it would. And their services are still expanding. And you always look at expansion versus contraction. That's how you measure an economy, not just GDP. GDP is the final outcome of spending. It's the final measurement of GDP. I'm sorry, of the economy. It's the final, but to see to see the leading indicators, you look at the PMIs, the manufacturing and services PMIs. So the service PMI is still expanding. The manufacturing was also expanding, but they're now rolling over. So, oh my God, that sounds bad. It doesn't matter. What that means is the slower your economy, the more liquidity to come. And the reason they can do that because their inflation is near zero. They have no inflation. China has no inflation, and and their PPI is negative. It's like -5. What does that tell you? That tells you that they will keep pumping liquidity. And I have this inside of my newsletters. If you guys want to check it out, I'll talk about it tomorrow. Also, but Chinese liquidity is picking up from the government and from their central banks. And that's going to fuel our markets to some degree. If you're a multinational, if you're Tesla, which is why I'm so bullish on Tesla, then as citizens get more demand, well, that's more demand for EVs. Oh my God, they're not going to buy Tesla. Okay, well, they guess what? They just had strong delivery numbers in China, and I don't know. It's a dumb argument. Either way, you're going to collect more liquidity. I mean, you're going to collect more earnings. Your earnings are going to go up if you're a multinational company. So China's economy is recovering, and yes, it is slow right now. It's not as strong, but they just cut rates. They're cutting their 1 and 5 year loan rates. They're increasing loans. They're increasing liquidity. They're increasing funding from the government, and that's only going to push more money flow into the global economy. Plus, that's going to cause them to buy more commodities at some point. So, hey, commodities might make a run back, might make a comeback to some degree, but I don't think they're going to be as strong as stocks. I think stocks are the best risk reward, bar none, not even close. Oh, wait a minute, I'm wrong. Crypto, because also Hong Kong is trying to be the central hub for crypto also, and so I think crypto really does benefit the most from this. We're getting that second push by Tesla. Nice. S&P also on the 5-minute. Ooh, new high by Tesla. Good. Nice. Got a new high. And what else do we got in here? But yeah, that's kind of my thoughts on the Chinese recovery. They'll be fine. They're just going to keep pumping liquidity, man. And who's the biggest companies in China? Is it Apple? Yes, Apple goes higher. Tesla goes higher. I don't know if Amazon's in China. They might be. Amazon goes higher, maybe. Google, I don't know if Google's there. So just think of those big tech companies. Now, there's other smaller companies that will benefit, but you have to look at the business model. Are they really going to benefit over time? The thing I always say is, yeah, you can go find a second tier, third tier company, who is it? Neo, blah, but they fall apart when their earnings come out. If they're not making progress, then they just collapse. The price goes up between quarters, but then when the quarters actually come, when the earnings reports actually come, typically they lose market share. their earnings suck, their debt is climbing, they're not handling their, their operations correctly, blah blah blah, so they're falling apart, which is why you just stick with the best when it comes down to it. But the Chinese economy definitely. Now we do have some. What was the data? There was some data from China today. No, that wasn't today. Oh, it was today. Their current account. Nobody cares about that. The EU too. When the EU starts to recover, when the European, in the EU, the European Central Bank / Euro area recovers, that's also going to be bullish. Their inflation rate year over year is still falling. They're at 5.5%. They're still hiking rates. They might be done. Their unemployment rate is at 6.5%. It is falling, which is good. It was worse in October. It was worse last year, but it still needs to come down. Core inflation still kind of sticky. Same story as the US. So yeah, there's like I said, we're at the beginning of the cycle. We're going to be much higher going forward. All right, Fibonacci. Ace, we'll see you at that fitness live. Yeah, I'll be on that fitness live tomorrow. I am unbanned on TikTok, I believe. I got banned for being bullish on Tesla and bullish on Bitcoin. Anyways, yeah, that's what we're looking like right now. So what do we want to look at? What do you guys want to hear about? You want to hear some news from... Do you want to hear some news? Hey, you know what? I got some really cool charts. Or maybe, I'm going to talk about this on Saturday. I'm going to go over make sure you guys tune in on Saturday. Tune in on Saturday on YouTube. Come support me on Saturday, 3 p.m. Eastern. I'm going to go over the macro report and the actual report. Sign up if you want to get it in an email. And it's really going to clarify where we're headed. This is Wave 2 FOMO. That's what I call it. It's going to clarify the data for you if you're interested in learning that. And I talk about it a little bit on here, but clear that up. And what are the best... Who's set to rise the most from this turn? Who is set to rise the most? Who? Never financial advice, but it's something to think about. It's just my thoughts, my views on checking out the market. Now let me go to let's check out this wait, who are we looking at here? So we are pricing in a hike. Oh, student loan forgiveness is not happening. What does that mean? Do they cancel it? Do they open it? Not sure. Okay, so... Oh, that's right. CNBC. Let's see what CNBC are talking about here while we watch the markets. That's what I was going to do. Let's check out what these guys are talking about. See if there's any good stories going on. We got about 45 minutes. See how smooth I can get here. Let's see how smooth I am. Entire screen. I'll always make this entire screen. There we go. Change that banner. Oh, wait. Get this back. No recession. And we got Tesla marching higher. Russian deputy PM Novik orders to study of export quotas for oil products. See how that works out. Not sure. It's not really that important. All right, here they go. Tell me if there's an echo. I just want to make sure it's not bad audio. The best performers on the Dow this quarter. No surprise. Dang, my bad. I didn't see that. All right, let me try to fix this.
Going back just a little bit this year, hence the revenue shortfall.
Steve, thanks. Good bounce off of the City note. Meantime, it is full speed ahead for Carnival. The cruise line gets an upgrade from Jefferies today to buy a new target of 25. That implies a 40% plus return. Carnival has been the S&P leader quarter to date, with the other major cruise lines not far behind. Joining us this morning is the analyst behind that call, Jefferies' David Katz. Great to have you, David. Thanks for the time. You go all around the horn. You talk about leadership, capacity, fuel. Ladder that out. What's most important to this story right now?
Yeah, and as you pointed out, Carl, in your intro, this stock has clearly had a bounce off of the bottom, and it's had a fast money trade that has worked. And our call is that it's now time to start investing. But you hit a number of the points. For us, the big change has really...
Hey, thanks for letting me know. Is there sound? I'm sure it's probably coming from my mic. I bet the sound's coming from my mic. All right, yeah, let me try to figure this out. I don't know why it's not sending you guys the sound.
And the change in management team and how engaged and how focused they are. We at Jefferies appreciate the benefits of a flatter management structure, and that's what Carnival is doing. And it's for the first time in many years. Performance marketing and more sophisticated marketing approach are examples of some of the initiatives that they're pursuing. But I think it's also important to recognize the demand surge is just getting started for Carnival, right? Anything with large groups of people, it's just taken longer logistically to recover. And that's true in cruise, and it's true for Carnival. So our argument has been that they don't have a ton of pricing power. Well, guess what? They don't need it. They just need customers to come back, occupancy to fill up, the onboard spending to come, and the cash flows will flow through. And within the EV, converting that debt into equity, where a lot of that value expense.
So what I was trying to do is get it to, I think you guys are hearing it from my mic, which is not legit. So let me figure that out, but I'll leave it on the mic for now. Basically, they were just talking about Apple going all-time highs. Why? Because even though iPhone sales are slowing, but like we said, the Chinese economy is going to start recovering. The market's looking forward to that. It's going to price that in going forward for Apple. Now, you said Enphase is moving up. We'll check out Enphase finally moving up. And then, yeah, I guess I got to just play it through my mic, which kind of sucks right now until I figure this out.
Stock leverage is 6.8 times. Going to 4 times next year.
Oh, here's the Supreme Court blocking Biden's plan. This is let's listen to this really quick, because this is sort of that narrative right now where student loan retail risk, that everybody's like, oh my God, there's a risk of recession. Breaking news. Here it is.
Of student loan forgiveness. They have found that Biden did not have the standing under a 2020 COVID era law to give that sort of forgiveness. This obviously is going to have a huge impact on retail. We're talking about 40 million borrowers who would have seen some sort of forgiveness from this, either partial or full. And those borrowers, they're going to have to take another look at their budgets. This means less money for clothes, for electronics, for eating out. JP Morgan estimates that this could have about $10 billion of headwinds on retail. Remember, too, it's not just the Supreme Court case that borrowers have to look at. They haven't had to make any sort of payments on their student loans since March of 2020 because of COVID. But those payments are going to begin now in October. And that means yet another hit for borrowers and then subsequently another hit for retail. Now, the Biden administration is trying to provide some sort of relief to borrowers. They've talked about a 3-month grace period, and they have proposed a plan that would basically tie student borrowers' repayments to their income. So borrowers wouldn't pay more than 5% of their discretionary income under this proposed plan. But definitely a big ruling from SCOTUS, a big hit to the Biden administration, to student borrowers, and to retail.
Emily, do we know if there's any grace period in here that is allowed for these payments?
So for this, it really just deals with the actual forgiveness of the loans. The repayments is on a bit of a different track, but it's obviously very much related to the retail market and the impact it's going to have. So student borrowers still have a couple months where they do not yet have to make payments on their loans, but when they do in October, they're not going to see their loans shrink any. That's what this plan would have done, and the Supreme Court has now effectively ended it.
All right, Emily, thank you very much for bringing us that breaking news. Of course, guys, this was the big one that the economists were watching and the retail analysts were watching because it has implications for the consumer. And just to underscore, if it had held up, $400 billion in debt would be canceled. 40 million borrowers and fully extinguished debt for 40% of student loan borrowers. So this is going to be a hit to discretionary income. And all the retail analysts in anticipation have been gaming out which clothing stores, which retailers are going to be most affected. I pulled up a chart from Jeffries, for instance. They look at the demographic, right, and how much a percent of consumer discretionary spending gets spent. They say Amazon is at risk, Walmart, Target, Costco, and TJ Maxx, just in terms of the exposure to consumers and the amount of discretionary spend they have. But, different UBS analysts say they're likely to disproportionately reduce spending on soft goods versus other categories. It's an important demographic for spending, obviously, if you look at the age.
So it's not necessarily targeting the low end of the consumer, right? I mean, those who are, say, non-college educated obviously have no student loans.
Well, that's true. Yeah, no, they're looking more at the age, right, of people who are paying student loans and the bulk of where their spending goes to. A lot of people, they put companies like American Eagle Outfitters and Urban Outfitters because of the age group and where we see that spending most at risk, according to the analyst. FIGS is on there, Crocs, Gap, Nike. These are the names that come up over and over.
Any beneficiaries in terms of, I guess, those companies that offer credit somehow to this?
SoFi people look at.
Yeah,
right?
I'm looking at it now. It's trading very actively. SoFi, it's about 3%. Because I guess conceivably it would open the market for them a bit more in terms of helping people who need.
Well, remember, it's been a 1-2 punch here because first it was the debt ceiling bill, which resumed student loan payments
Right.
after the moratorium. And that's the sort of period that they have a few months before they have to start paying. And then this cancels the whole notion of the cancellation of that debt. I want to bring in senior personal finance correspondent Sharon Epperson with her take on the news this morning, Sharon, and how big of a deal it is for these student loan borrowers.
It is a tremendous deal for the more than 40 million student loan borrowers. And as you were talking about income, it is not only the student loan borrowers. Keep in mind, there are a lot of parents that are financing their children's education as well. And so those parent borrowers are also going to be impacted by this. And the Consumer Financial Protection Board has already said that 1 in 5 borrowers are at risk for being able to make these payments when they resume because of the amount of debt that.
Okay, blah, blah, blah. Anything better? We'll see how the student loan stuff plays itself out. I really doubt that it's going to be that serious, or else the market would already price that in to the downside. So the market's already pricing that in. If anything, if there is some type of forgiveness, the market, that'll be some more tailwind for the market. So that headwind's priced in, market doesn't care at this point. Because there's so much cash on the sideline. That's pretty much the story here. There's so much cash on the sideline waiting to come into the market. And there's not a single headwind that can really knock us lower. It's going to take something bigger than student loan people having to repay their student loans. It'll slow down spending a little bit. But look at the bills. Like, look at the Inflation Reduction Act or the internet bill. That people, as long as people have jobs and payrolls are still, good, people can spend. They'll stop buying, extra food and, going out to restaurants and traveling and pay their student loan debts. So that's sort of what you're getting. Okay, what is this market report here?
Close in just a few moments, higher across the board, like we're seeing in the U.S. The Euro Stock 600 closing out the first half of the year up now nearly 9%. Inflation in the Eurozone falling for the third straight month in June, coming in at 5.5%, and that was down from 6.1% in May. Progress, but the core numbers that the central bankers are so focused on, excluding food and energy, actually rose to 5.4%. Earlier this week in my conversation with ECB President Christine Lagarde, she doubled down on the notion that inflation is still too high. The ECB, remember, hiked interest rates to their highest level in 22 years earlier this month. She all but promised that another hike was coming in July and seems to suggest that they're nowhere near done. She's even more explicit than Powell is in we need to go higher, we need to stay there longer. And sort of a new element, Carl, is that she's facing some political pressure. Some of the politicians in Italy and Portugal are going after her for misunderstanding the nature of inflation. No politician wants weaker economic growth. And now Europe is sort of flirting with recessionary levels. The calls are only growing louder.
This is exactly why Powell always told us the time was of the essence. You got to move quick because it's just a matter of time before they start getting external pressures that make it harder to do what at least the fundamentals would say you should do.
ECB was a few months behind the U.S. in raising rates.
Man, this is just an old story. We know they're raising rates. They need something to talk about. Not that relevant. Sorry, I'm trying to finish this bar. All right, so let's dive a little deeper into this, right? Price of Bitcoin fell Friday following the report, blah, 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 that Bitcoin filings from big names like BlackRock and Fidelity have been deemed inadequate in the eyes of SEC. What does that mean? Deemed inadequate? That is just subjective language by the SEC, right? And I'm not saying that they're saying there won't be the ETF won't happen, or they will happen for sure, but I think it's just a scare tactic to keep the front running of this Bitcoin price. They've been focusing on this for so long. What exactly is the reason for that? The SEC has said time and time again that they can't let a Bitcoin ETF go forward until one can demonstrate it will be sufficiently structured to prevent fraud and manipulation. Oh, but they passed a futures ETF and they passed a 3x leverage ETF. Makes no sense. And manipulation in response to the previous attempt at a successful filing. We might be failing here. We might be failing to hold VWAP here on S&P. What does Qs look like? Qs pulling into support here. Any breaking news that the Apple breaks? No, nothing. Just technicals. The surveillance agreement was included to satisfy that worry. Other funds. So it literally says the surveillance agreement was included in BlackRock's filing this month to satisfy that worry. Other funds have similar language in their applications. BlackRock's iShares and Fidelity, which refiled this paperwork for a Bitcoin ETF Thursday, declined a comment. The SEC also declined comment. I think they're just using this. They might be using this to actually decline or to sort of weave out the other ETFs or the other submissions. Maybe they're trying to weed them out also. I don't know. I really don't know. This is all speculation, but they might be trying to weed out other people, giving BlackRock, because it looks like they refiled again on Thursday. So that tells you this is being updated consistently. This is consistently being updated. That could change literally next week. So it's like, okay, it's inadequate. Okay, well, where do we need to fix it? They fix it. There we go. We're making progress. Next, you know, the price is up. So I think that's just silly. It's just silliness, but looks like the traders don't really believe it. because Bitcoin is not really pulling back that hard. It should come back to 25K if that was the case. That's where we broke from. Okay, yeah. So a couple other stories that I wanted to go through before we. Oh, what up, Asan? Before we head out here, we got about 30 minutes. Yeah, we got about 30 minutes. Let me just make sure I can pull this up efficiently while we keep our eye on. While we keep our eye where it should be. Okay. And I'm really hoping that I can fix the audio because that sucks.
All right, so I'm almost 35.
Oh, sorry. All right. So yeah, this is I wanted to kind of talk about this Tesla stuff. Let's see if I can bring this up. And what it is all the upside move for Tesla.
A lot of information out.
All right, so this is a TikTok. We're gonna try this today. Got the comments on the right hand side. Look at all these scammers right here. Uh-oh, Tesla's starting to break that 63 level. See if we could hold VWAP at least. Really needs to hold VWAP at 63 cents. So yeah, let's get into this really quick. Apple hit new all-time highs every day. How far is this gonna go? How far is Apple gonna go? I drew a couple trends on it. I don't know exactly how high it's gonna go, but I did draw some trends. I think it just keeps chugging along with small. It's gonna be like a slow melt up for Apple because all the macro stuff, Asan, you probably are not Asan, I'm sorry. Football Legends, you missed a lot of what we talked about earlier this morning. So you can climb back at the beginning. We went over the macro, kind of the data coming in. Inflation expectations are basically improving, and consumer incomes are moving up, but their spending is not. So they are bracing for the recession. So if you look, this thing is really just starting to break out. It had a gap up, so it could move up a little bit, come back, fill the gap, support, go higher. I think it goes much higher. I don't think Apple's a great, like if I were to say, how do you trade Apple? How do you swing trade it? You don't want to really get long Apple till it comes back to the all-time high. If it ever does, I don't know if it ever does come back to 183, 185, whatever. So maybe if it comes back to 183, or 185, maybe you could get long Apple for a longer swing trade. But for the day trade, you have a lot of little small opportunities for day trades. But again, I always say the big moves happen in after hours right now. The reason why swing trading is so profitable when the market starts moving up is because you get gap ups. That's where all the big moves happen in after hours. Not all of them, but there's a lot of data that suggests that most of the market's moves happen in after hours or pre-market. So, yeah, look at this choppiness in Apple. Choppy, choppy, choppy. I mean, if we really go back, let me try to, hey, where's my 5 minute? Oh, there it is, 180 day. All right, let's see if we can hold this. All right, just want to really preview this because this is important. Hopefully this is the right chart. Yeah, what? That's weird. All right, yeah, hopefully this is the right chart. All right, so yeah, you have that after hours. Oh, I see what's going on. It's so vertical. Okay. See if I could do this correctly. This big move in Apple, the way it's been going is you have a big upside move during the day, gap up in after hours, right? Kind of moved up, nothing really, gapped up in after hours, came back. So you had an opportunity there, gapped up in after hours, right? Sold off, gap down, found support. And this is where we found support, gap down, moved up during the day. And then this red level up here is really where it started to elevate again. So you did have this day, this day where it moved up. You had the S&P probably in your favor. Move sideways, big move on the open. sideways, down, big move during the day. So maybe not. Maybe you can catch some daily moves where you could trade it. That's definitely an outcome, or that's definitely a possibility. But today, when you get that big move on the market, that big gap up, then you have Apple gap up. So again, I'm always tracking the overall market. And when you get the overall market gapping up, then you know Apple's going to gap up and then maybe run, maybe sell off during the day. Anyways, point being is you can day trade these things. How far does it go? It really depends on your time frame. Really, I've seen this happen with Apple before. This gigantic wedge, right? So we could even do a Fibonacci on this. We could really do a Fibonacci and see exactly how far. Let me quickly do a Fibonacci. I know we're like off, but I'm gonna want to answer his question really quick. Draw fib on here. At least the golden pocket or the 2.18 fib retracement. There we go. So if we draw the fib, the golden pocket was at 160. I'm thinking Apple could run to 220, 250 by the end of the year. Probably, I think we get to what are we at? 192. We probably get to 220 for sure by the end of the year. Maybe sooner than that. And then going into next year, as the liquidity cycle, you know, happens, 250. Some people are calling for a 300. So yeah, that's what you got with Apple. All right. Anyways, yeah, let's listen to what this guy has to say about Tesla, and then we'll go over sort of what they're seeing. Oop, no. Oops. That's not what I was trying to do. Is this the first? Oh, here it is. Okay.
If you think about why Tesla has moved up so much, people are thinking the second quarter gross margins are going to bottom. You haven't seen any more price cuts like you saw earlier this year. The China volumes have been very strong. Elon is clearly more focused on Tesla. He hired somebody to run Twitter, but the big thing is going to be.
So you're getting the China volumes come in pretty strong. Ooh. Hold on, let me see SPY really quick. Qs are dropping. Qs are starting to drop. VWAP and SPY dropping VWAP. Okay. That's not good. Might have to set my stop over here. Let me make sure there's no breaking news. See, this is a tough part. I'm gonna have to figure out how to do this while we're doing a report. 262. Gotta hold 262-ish. But we are below VWAP now, so that's where I get a little bit more bearish. I get a little more bearish under VWAP. Couldn't hold. While we are talking about Tesla, 262, what does that open? Okay, we had a bounce. So we did get a bounce off. What is this? 262.20. That previous level got a bounce off there. Maybe we have a chance to re-enter later. Oh, that stinks. That sucks. All right. So I'm gonna set my stop.
Freaking way.
Oh, man, I do not know how to control this thing, bro. Come on.
No.
Golly. Where's my button when I need it, bro? Where's my stupid button when I need it? All right, I'll just leave it right there. Let me do this really quick. I gotta set my stop. Let's see. All right, I got my stop set just in case while I'm doing this. All right, so basically what we're looking at here is just sort of some of the news that's coming into Tesla. Hopefully this works.
If you think about why Tesla has moved up so much, people are thinking the second quarter gross margins are going to bottom. You haven't seen any more price cuts like you saw earlier this year. The China volumes have been very strong. Elon is clearly more focused on Tesla. He hired somebody to run Twitter, but the big thing is going to be Cybertruck.
Hey, remember that too. Twitter, a big reason why a lot of people sold off the stock is because he was focused on Twitter so much, and he sold all that stock, got the Twitter, and people are pissed. Now that that's being resolved, that's one of those risks or one of those headwinds that is off the table.
Reminiscent of what happened in 2020 when they were bringing the Model Y out. There's 1.3 million pre-orders, and we think it's going to do what Model Y did in 2020. We think this rally has more room to run. You saw volumes explode in 2021 at Tesla. It was up about 87%.
So 2019, I remember when Model Y came out, there was a lot of pre-orders for it. That demand drove the stock up a lot. So he's saying basically that Cybertruck will do the same thing. Now, is it as quality as Cybertruck? Probably not, because Model Y, everybody uses it, but there is a large trucking market. I kind of doubt most people will buy a Cybertruck because the way it looks, though. So maybe they don't, but we could be wrong. Maybe there is. There's a lot of pre-ordering. It does a lot of stuff. There could be more demand. You could see that switch into the Cybertruck. There's already 1 million orders in the backlog. So that's kind of here. Hey, maybe we get the same sort of upside surprise while we're down on the stock 70 from the highs, and it could take us much higher, especially with the bullish macro.
I think volumes next year will be up over 50%, with the streets looking for up 27%. And that's what has to happen. All the analysts have price targets below where the stock is today. The average Tesla price target is about 192. The stock hit 227 today. You look really foolish as an analyst with a buy rating, and your price target's below where the stock is. So you're going to see a rash of price target increases as people catch up to where the stock is. If you think about why...
Okay, so yeah, the analysts are also behind on the stock. This is the second one that we're going to look at, but the analysts they always put the price lower. They raise their price target for Tesla, but it's hilarious because they raise the price target, but it's still below the current stock price. They never really raise it, as high as it could be. So anyways, this is a second part of that.
A lot of information out there is still not being incorporated into Tesla stock. We've already seen price increases on Model Y since April as the inventories have fallen. That's now become the best.
Every stock.
So,
Dang it, here we go again. Fail again. We'll get through it.
a lot of information out there that's still not being incorporated into Tesla stock. We've already seen price increases on Model Y since April as the inventories have fallen. That's now become the best-selling car and truck in the United States, not just EVs, all cars.
Could we be seeing all-time highs again in this company?
Second quarter will be the trough in gross margins. Cybertruck's going to be huge. The street is underestimating it. It's worth about 60 cents a share. And as an AI play, they're going to start licensing.
Okay, before he gets to that, they're going to start Oh my goodness. Okay. Messing this up. They're going to start licensing their Dojo, right? That's a key thing right there. Dojo is their supercomputer. It has more data than any other supercomputer when it comes to AI/robotics because of all the data they're collecting on the road. So basically the theory here, and this is probably the most bullish thing about Tesla, other than the gross margin starting to bottom, from a fundamental view, the FSD catalyst, full self-driving catalyst, is the future. And they have billions of data, tens of billions of data, maybe hundreds of billions of data at this point. And I know Ross Gerber the other day he took a ride in a Tesla with this guy that hates Tesla. He pretty much hates Tesla. And the car, they rode around for an hour and the car drove itself. There was one instance where they came upon a stop sign and there was this incident where it ran the stop sign, but that's not actually what happened. The stop sign, the infrastructure was built wrong. The line for the stop, you had the stop sign, then you had the line. The line was way ahead of the stop sign. So it pulled up to the line and it looked like it went past the stop sign, but the stop sign was just set really far ahead. And then there's another car that crossed over into the lane. They crossed really far into the lane. So the car kind of went forward. Either way, it's still driving better than most humans. And also, after that type of incident, now you have the data for the Tesla to say, okay, when there's a stop sign that's really far away from the actual line, now we can adjust and we just stop earlier. And so that data gets inputted. So every time there's a mistake or something that's off on the road, that feedback will go into the supercomputer Dojo, and then it'll reprogram all the Teslas to be able to adapt to that situation. And that goes to every Tesla. So it's really, really innovative. And if they license out Dojo, what basically happens is Uber, Lyft, all these taxi car services are going to have to just buy a Tesla or buy Teslas and then rent out the full self-driving. And that's the big catalyst. Elon said the other day that he thinks full self-driving could be out this year. He says that a lot. I know he does say that a lot. But with the bullish macro, maybe he's wrong. Tesla goes up 100x. I'm not 100x. It doubles from here. It goes up 50% from here, and then maybe they're wrong and it sells off a little bit. You're still great, right? Totally different investment from trade. Point being, the stock has a lot more room to run if it starts pricing in Cybertruck orders, revenue, bottoming margins, right? It has a lot more room to go if it starts pricing all that in, plus prices in the full self-driving, which is, I think I don't want to say it doubles the stock, but because it's already at $1 trillion pretty much, but I think we could double just off full self-driving actually being implemented and regulated in the US, which is big. Hey, don't quote me on that. Maybe it only goes up 25%, but it is the biggest. It is the most advanced AI in the world that we have right now that's actually working on the road 24/7. So those are my thoughts on that. Of course, there's a lot of bears, but it's pretty much what we're seeing here. Also, I guess I got to make those videos. There's some more bullish news from the compound. I got to edit those videos and basically showing that the S&P, when it's above the 200 daily moving average, it's usually in pretty good shape to keep moving up. So it has its most bullish moves when it's about 20% or 10% above the 200, 10 or 20% above the 200 moving average. And I think we are starting to see that. I'll get better at showing these little clips. Hypersensitive, that was my first time. So don't feel sorry for me. No, I'm just kidding. I just hate when it doesn't work. It pisses me off. But I'll figure out how to get that. Plus the audio. I got to get the audio right too on this. It makes the stream really sucks when this thing doesn't work right. Not as many in play. Okay, so I'm going to switch back to the market so we could finish off here. Get that window back online. All right, cool. Looks like we're starting to find support here. We are below VWAP. That's pretty bearish for the market. Big up move in the open. We're almost actually back to the opening price. So we probably grind. You could call this a falling wedge. We broke the downtrend. Looks a little bearish, but we have had these second half moves where the stock market either moves up first or down first, consolidates, and then moves back up. That's usually the trend, right? Because we're now in a trend. Look at this. We're now in a trend. We're in an uptrend. So we probably pull back a little bit, consolidate, and then move higher. But maybe we come right back down to fill the gap. I don't know. I really don't know what's going to happen. I'm just watching the levels day to day, because if we lose, what is the most important level, right? What is the most important level that would take us back to the lows? Not to the lows, would take us back to fill this gap down here, this white line. What would take us back to fill the gap? I think to fill that gap, we need to violate 441. I see that was such a big gap. I think we really need to hold below a couple levels of support. Actually, let me take this off. Gap strategy. Let's take this off. Let's see if there's any prior support down here. We opened at 441. Maybe that's just it. 441. That's where we slipped earlier. So it could be 441. And you just look at the daily candle and say, all right, well, if we get below 441, 441.40, then that could take us back. Yeah, I think that's about it. So let's do that. 441 to 440. That'll take us back to fill that gap to the downside if we hold beneath that level. All right, so where is it? 441, 441.40. If we drop this, I think that's pretty much it. If we get below this, we still have some room, but if we get below that, then it's possible. It's very possible that we just come back and fill that gap. So we got to hold this today. We got to hold this level. Let me push it out a little further so you guys can keep your eye on that. 441, 441.40. Got to hold this level on the SPY. But if we're looking at the Qs are going to look a little different. Take a look at the Qs. Where's that level for the Qs? Qs got to hold 376.22 to 354. I'll just draw it from here. There we go. What a struggle. All right, so we need to stay above this. We could, now this is pretty simple. We come back, we find some support. I think we bounce. When you get a sharp move to the downside like this, usually is a follow-up with more upside. So I think we do have more upside. It's just going to be a matter of finding support. Where do the buyers start to step back in with that bullish macro? Let's see. See if I can get this to work today. You guys can hear that, huh? It's really hard to know what you guys can hear if I'm not live because I can't tell. I can hear it from my side. But anyways, got like 4 or 5 minutes. We'll do a wrap up. We're going to do a wrap up in about 4 minutes. We're finding some support here on Tesla. Now I can use this as my my music to take a break until we get that Stream Deck working again. Be right back. Cool. Well, at least I know that works now. Any last questions before I do the exit? Let's put on here macro wrap up. Just the macro. And if you got any suggestions, please don't feel free to let me know. Well, we are holding that 262 level now. That's good. For Tesla. SPY holding this level. Coming in at 356. Okay. So yeah, let's wrap it up. Here's what we got going on. All right, so here's what we got today. Just to wrap it up for you guys. Okay, I'm gonna try looking in the camera, do this more professionally. Basically, we have the market. I think we are entering wave 2 FOMO. Okay, we're getting into wave 2 FOMO because the macroeconomics are starting to align. They're starting to line up. They keep aligning up, and they're getting better. Inflation is already falling. We know that it is now below Fed funds rate, which means that it's in restrictive territory. So that pushes pressure for the Fed to hold the pause or to stop hiking or to stop being so hawkish on the market. Do we know that's going to happen? We don't know. But for one, the good thing is GDP is now starting to bottom. We're seeing GDP come out better than expected. This week, the housing market is starting to bottom. We're starting to rip. No, I don't want to say rip higher. It's not a chart, but the housing market is bottoming. Housing starts, pending home sales are starting to come up. They're bottoming out. Building is coming up. The home builders ETF, construction ETF, all-time highs. Home builder sentiment is starting to rise. So that's one part of the economy that is starting to recover. Now, the Fed's preferred inflation gauge, PCE, also came in less than expected, right in line. And that's positive news. So the market started to rip because that is the biggest risk to the market is still inflation. So in that core area, we do expect it to fall because shelter prices in real time are actually falling, but the CPI doesn't reflect that. So eventually, I think we do collapse, and maybe by the end of the summertime. Next, we have the consumer. How's the consumer doing? Well, consumer income still rising. So consumers are still strong despite all this. Oh, the consumer is going to collapse. Things are going to go negative. The consumer is still strong. Their incomes are coming in. They're saving more money. We see the savings rate still climbing. Record retail inflows into money market funds, not money market funds, that too, but into the markets. We're seeing retail come in. A lot of hedge funds still on the sideline. So they're still waiting to see what happens, which is good for the retailers. The retailers are getting in early right now as we move higher. So consumer spending is still lower, and that's good. It tells me that people are bracing for recession. They're not overly spending, especially not on goods, but they are spending on services. They're traveling, right? They're doing this, they're doing that. Plus, the baby boomers are spending their retirement money. So spending just isn't going to collapse. The most important factor here, right, to this is consumer expectations are better. Inflation expectations are going down. That's an important factor. But the big factor is that inflation will continue to decline as long as oil and energy and shelter keeps falling, which it should. Now, the next argument is we're going to go into a deep recession. Things are going to collapse. But we just don't see that happening, right? Like I said, the housing market is bottoming. The labor market is still tight. We're below 4%. Once we get to 4%, the Fed could possibly cut rates. That's also a possibility. Maybe they don't. But, the labor market is still strong. People are coming into the economy. Unemployment is still low, like I said, but payrolls are still strong. And we don't get payroll data, I think, till for a couple of weeks, maybe next month. Well, that's like in 2 weeks. That's like literally in a couple of days. But we do get payroll data, and we'll see is the consumer still, are jobs still out there? We know job openings are still strong. So basically, the economy is starting to recover. Yes, there's a recession in some areas, but we're starting to recover, and inflation's coming down. And that is a good recipe for what they call Goldilocks, where growth is accelerating. The Goldilocks is the most bullish factor, or the most bullish cyclical factor to a rising stock market. And what that is Goldilocks is growth is accelerating while inflation is decelerating. So we're getting that. Now, let's say growth does slow down and that services part starts to roll over. Okay, great. While we have a lot of the fiscal policy coming online. So we have the Inflation Reduction Act, right? That contributes to tech, which is why I think we see, you know, a lot of EVs and technology companies move higher, because we're investing in AI, we're investing in electric vehicles, we're investing in renewable energies, and in general. Look at Enphase start to recover now, and so you know, the government is spending their liquidity. Now, the biggest risk to the market has been, other than, you know, fiscals coming in and that's solving a lot of issues, was liquidity leaving. So this too, and I'm going to talk about this tomorrow in our live at 3 p.m. Eastern on the YouTube channel. And this is a really complicated concept. But the Bears, their last I guess weapon, or their last narrative against the stock market, was draining liquidity. We're moving liquidity from the capital markets. It's going to smash risk assets like Bitcoin, Tesla, big tech. Any type of risk asset would get smashed, but that's just not the case. And the reason why is that once we raise the debt limit, that meant we would be draining, or the U.S. Treasury would now offload a bunch of treasury supply onto the market. And that treasury supply means that it should push rates higher. We are seeing rates higher, so that is happening. But the second part would be a liquidity drain. So who has to come in and buy that? It would be banks, right? Banks would have to come in and buy all those U.S. treasuries. And if they have to do that, they have to drain their cash. They have to, you know, and that's the liquidity drain. But it's not happening. The reverse repo facility, which I will show in my macro report if you guys subscribe to it, or if you're already subscribed, and I'll talk about it tomorrow. The reverse repo facility is basically this facility where the Fed basically pays interest to money market funds for parking their cash there. And that got up to 2.5 trillion. And I always said, hey, that reverse repo facility could be the actual thing that saves the market from any liquidity event. And now we're starting to see that happen. We're seeing the reverse repo start to fall. And that's good, because that cash is leaving the reverse repo and it's going to the banking sector, the money market funds. They're moving that cash. They're not moving it, but they're removing their cash from the reverse repo, and they're buying the US treasuries, which basically means there is no liquidity drain. So we're seeing bond volatility drop, and that is key when it comes to the market. It's key because bond volatility, the higher we see bond volatility, which is uncertainty on treasuries, the more bond volatility we see, the higher the haircut that lenders have to make, meaning lenders have to offer more, have to put a higher interest rate on their lending, which turns off borrowers and lending demand, etc. Because their treasuries, their collateral is a little risky. Their collateral is moving up and down, has a lot of volatility. So now that bond volatility is coming down, that means those spreads are going to be tighter. That means the lending interest rates are going to be lower, and essentially, in theory, and all that liquidity from the reverse repo is now coming into the markets, and it's going to treasuries first. But I would bet, as the stock market continues to rise, as the inflation falls and conditions improve, I bet that reverse repo, all that cash of the reverse repo, is going to reverse. It's going to leave the reverse repo, and it's going to start flooding into the market. Because who the heck wants to get 5% interest for 1 year when you could literally buy the S&P? NASDAQ is up 20, 30, 40% from the lows. And as the, everybody's in cash. So as conditions improve, then you're going to actually get a FOMO, second wave FOMO, like I said. So I think that money market fund people will take their money out and say, not everybody, but some people will take their money out and say, okay, this doesn't make sense. Market's going to all-time highs. All the risks are off the table. There is no geopolitical risk. Oil's going lower, so inflation's going lower. And everybody's piling into the stock market. Look at all these great narratives with AI. Look at all these great narratives with, the Bitcoin ETF coming online, which is another big thing because BlackRock always gets their way. They're tied with the government. So point being, wave 2 FOMO is coming, and we'll keep track of the market going forward. I'll be here Monday through Friday, 7 a.m. Well, I guess 7 a.m. my time, 10 a.m. Eastern, 30 minutes after the market opens, and we will track the day-to-day changes. And at the end of the week, have the macro report. Anyways, you guys have a blessed day. I appreciate you guys coming on, and we'll catch you tomorrow. Hey, my bad, my bad. Okay, I guess I'm not going. This is kind of silly. I didn't see the comment. Let me answer that comment. Asim, do you think BTC will go higher next week? I'll just say one thing. Watch that 32K level, right? The longer we consolidate at 30,000, the stronger that support. So we need to hold 30K. That's that next level, right? 32K is at the top of the top of the channel, not channel, but the top of the resistance. So above 32K, it's going to be more FOMO. So next week, I do not know. I really don't know if Bitcoin moves up next week. I really am not sure if it goes higher. I can't predict this. So that's why you take probability bets, right? A hold of 30K is bullish. And but right now it's all narrative driven. It's all narrative driven. I will say this. If technology starts to break out again next week, expect Bitcoin to rise automatically. They're not completely correlated, but as risk assets move higher, Bitcoin is going to be carried higher because there's more confidence coming into the markets. There's more confidence coming back out of a bear market. There's a lot of cash on the sideline. People will FOMO in. So keep your eye on that. Keep your eye on that. I think we are going higher. Yeah, for sure. I'm gonna give as I appreciate you guys coming on and supporting. Like I said, anyways, I'm gonna clock out here. I gotta get ready for a meeting. You guys stay blessed. We'll be on the fitness channel, TikTok tomorrow, 7 p.m. Eastern time. I'll do a macro report at 3 p.m. Eastern time. And other than that, you guys have a blessed weekend. Stay blessed. Eat healthy. Growth mindset. Stay blessed.